Doug Casey, founder of Casey Research, has long been regarded as a preeminent thinker in the investment world. Today, he breaks down the biggest challenges facing our world and what changes 2020 may bring in store for investors. Doug Casey, thank you so much for joining us today. I couldn't think of anyone better to ring in this new decade with today.
Well, thanks, Danielle. And as you know, I love being on your show with you. So let's proceed.
Yes, Doug, last time we spoke, you talked about America entering a civil war with partisan divide, which has never been greater. So what better time to ask you this ahead of the 2020 presidential election now? How does this play out? Does it get any better? How do you see it rolling out here?
The prospect of a civil war sounds outrageous, almost ridiculous. The United States, the only reasons that we won't have a civil war are because half of the country are on psychoactive drugs and the other half seem to be sitting in their mother's basements playing video games. But the reason I say that is the people in the red counties and the blue counties really seem to hate each other. They can't talk to each other. I've seen this personally, and it's quite amazing. It's much worse than it was during the 60s. It's a culture clash. It's almost like a religious war. These people have totally different values. They see the world working in different ways. They don't watch the same TV. They don't read the same papers. They're like on different planets, and they shouldn't be in the same country. I've said this for years, that the U.S. Should break up into several smaller political entities, and I think it will.
Doug, I know last time you had correctly forecasted that President Trump would win the election when no one thought he would win. I remember it was during our Freedom Fest interview. Who do you think can take it?
Well, it all depends on the economy. Now that's not a new observation. Clinton said that quite correctly years ago. Look, I've been saying we're going to have a greater depression for years. It's going to be much worse, much different, and much longer lasting than the unpleasantness of 1929 to 1946. The way things are going, things could go over the edge in 2020. The only thing keeping things together is the Federal Reserve printing,
right,
indirectly, digitally, scores of billions of new dollars a month and pumping them into the economy, keeping the stock market up, the bond market up, the real estate market up. But the consequences of this are going to be disastrous. For one thing, it's the reason why the rich are getting richer at an accelerating rate, because they get that money first as it spews out of the Fed's fire hydrant. So answering your question, no, I'm not betting on Trump this year. And
Interesting.
It doesn't matter who wins. The next president is going to have a tiger by the tail. Now, this is very, very serious. Very, very serious.
Let's talk making money now, what most of our investors and viewers want to talk about. Last year when we spoke, you said investments you were staying away from included cannabis, and you said that investors should actually be stockpiling cash in 2019. So as we enter this new decade, has your view changed?
No, we had a bubble in cannabis. One of the kind of good thing, bad things about the Fed creating all these trillions of new dollars is it creates bubbles. And it created a bubble in, was partially responsible for the bubble in cryptos, which burst at the beginning of 2018, which was about the time the cannabis bubble burst, incidentally. And they were both very, very good to me. But I think the cannabis bubble is going to keep deflating because there are hundreds of public publicly traded companies that are in the cannabis business. Most of them are frauds or promotions. They'll never go anywhere. I think cannabis is going to be big in the future, but now there's a glut of it. Everybody's producing it. And it's taxed so heavily that buying it illegally is cheaper than buying it legally. So, no, look, it'll come back again, but it's too soon for cannabis to look at it.
Let me ask you then how gold plays a role in your portfolio as we head in 2020. You know, you've always been an advocate of holding gold and other precious metals. How do you see the metal set up here?
Gold miners are making money today at current prices of, let's say, $1,500, $1,460 actually, $1,480 is more, I don't know what it is, of gold. And I find that interesting because no other producers of any commodity really are making money. They're all losing money. So from that point of view, you'd say, well, maybe gold is overpriced, but no, it's not. The price of gold isn't set based upon new production. That's trivial. All the gold that's ever been produced is still in existence, probably about 6 billion ounces above ground. The reason why gold is going up is because it's the only financial asset that's not simultaneously somebody else's liability. There's no counterparty risk to it. And that's very, very important in a world that's head over heels in debt. Most of it won't be paid or it'll be inflated out of existence. So yeah, I'm a huge gold bull. I still am.
So okay, so you still think this is a good entry point, that it's not too high to be buying here?
Well, look, the gold was cheapest in actually all of recent history. Back in 2001, when it was $250 an ounce, it was cheaper then in real terms than it was in 1971 before it was devalued at $35 an ounce because the dollar's lost value. So it's not at the giveaway levels that it was in 2001,
right?
But it's a reasonable value because the financial situation of the world is on the edge of a precipice. There's going to be a panic into gold. And out of dollars, out of stocks, absolutely out of bonds, which are in a hyper bubble.
Are you better off in physical gold than the mining stocks, or would you have both?
They're two totally different things.
Agreed.
You buy gold itself for safety, for prudence, for insurance, to keep capital. You speculate in mining stocks because they're leveraged, and there's going to be a bubble, another bubble, like the cannabis bubble in mining stocks. And in the past, in these bubbles, of which there have been a half a dozen since 1968, let's say, the whole market's gone 10 to 1. And some of these stocks have gone 100 to 1. Some have gone, believe it or not, 1,000 to 1. It's going to happen again. So I'm a big buyer.
What do you know, this year, I think more than other years that I've been doing this, I've heard experts who were traditionally bearish or more conservative come out with really uber bullish calls on gold. So when you hear of these talks of, $5,000, $10,000, even $20,000 gold, how do you digest that?
Yeah, well, normally that's very scary because gold buyers are natural contrarians because conventional economists, who are basically just political apologists, don't like gold. But things have changed. The Russians and the Chinese have been the largest buyers of gold for years. Why? Because nobody wants to use the US dollar anymore, because all dollars clear through New York. And foreign governments, especially adversary governments, don't want to use the currency of their enemy. So what's their alternative? Nobody wants to use yuan and rubles, although they're going to back the yuan and rubles with gold. That's going to happen. Governments are going to use gold again, and it's going to be used in day-to-day commerce, believe it or not. the way it was before 1933.
I'm happy you brought up that point, Doug, because this year we've seen, really record buying from central banks. And as you mentioned, Russia stepping up their game, countries such as Serbia starting to buy gold, and Poland wanting to repatriate some of their gold back from London. A lot of people feel that these countries are protecting themselves against a future financial meltdown. Do you agree with that theory?
Oh, absolutely. Look, only a fool wants to hold the unsecured liability of a manifestly bankrupt government. And the U.S. government is manifestly bankrupt, running $1 trillion now, $2 trillion a year deficits, and nobody's buying their paper. They have to sell it to the Federal Reserve, which monetizes it. There's going to be a panic into gold by governments, by the average person. No, this is going to be very big.
Doug, before we talk about your news, your personal news, I have to get a question in there about silver. If silver sticks around the $17 an ounce level here, is that a no-brainer buy signal?
Yes, it is. Most people aren't aware of the fact that both the gold has more technological uses every day because it's the most malleable, the most ductile, the most inert of all elements. But silver has many, many more technological uses. And there aren't big inventories of silver. It's an industrial metal more than a monetary metal, but it's also a monetary metal. And relative to gold and relative to production costs and relative to everything else, silver is very cheap. And it's a much smaller market than gold. So I expect that when gold runs, silver is going to explode upwards. Great speculation.
Doug, when you say explode upwards, is it, taking out its, former highs of, 40, 50 bucks?
Yes.
Okay.
Yeah, it'll go way beyond that. And I think it'll happen in the next few years. So I think we're all going to be in hog heaven. Incidentally, talking about hogs in the commodities market, I'm more bullish about hogs than I am about anything else. I've been selling puts, but I don't think most people care about that.
No, they do. That's interesting. So in the commodity sphere, that's your top pick right now?
It probably is. Because of the Asian swine flu epidemic, which has killed half the hogs in China. And China is by far the largest producer and consumer of hogs in the world. And this has been out of the news, but the swine flu epidemic, there's no cure for it. Could spread to Europe, could spread to South America, North America. And hogs are selling below production costs right now. So just a tip. But I'm
How do you invest in that?
I'm short the puts because the premiums on them are very big.
How do you invest in that, Doug?
On the futures market,
okay.
you can buy ETFs, but I use the futures market for a number of reasons.
All right, let's talk about big news coming from you, Doug Casey. A new book that many have been anticipating from you, coming out in March, April, called, can we say the name?
Yes, you may.
Okay, Assassin.
Assassin.
Sounds scary.
Because my first, I want to get out of the custom of writing nonfiction books and do fiction, because it's a totally different audience of readers that'll read fiction, number one. And number two, you can say things in fiction that you dare not say in nonfiction. So Assassin is the third in a series of 7 novels about our hero, Charles Knight, who starts out as speculator, something that all of your viewers should buy at highgroundbooks.com or Amazon, which is about a mining fraud in Africa and a bush war in Africa and so forth. And so our hero, after reforming the unjustly besmirched occupation of speculator, becomes a drug lord and makes a lot of money. And like with speculator, the government steals it from him. So now he becomes an assassin. And here we talk about the art and science of political assassination. Is it right, wrong, good, evil? Does it do any good? Look at famous assassinations going from Caesar forward. So this is going to be an exciting and very interesting book.
I'm very excited, Doug. I read the first two with great interest, and I'm still waiting for you to invite me to be part of the movie whenever you film it. Told me
Danielle, I guarantee if it's picked up, we will
think of me, consider me. I don't think my acting skills are so bad. Doug Casey, thank you so much. Come back on when the book is out, please.
I will.
All right.
Thanks, Danielle.
Happy holidays, and thank you for watching. We will have much more for you as part of our special Outlook series, so be sure to stay tuned to Kitco.com.